Good morning, Trinidad and Tobago, and welcome to the Bourse Report. Well, earnings season is once again upon us, and today we're taking a look at two of the local grown entities on the Trinidad and Tobago Stock Exchange within the banking sector of the TTSC, and we're talking about First Citizens Financial Holdings as well as Republic Financial Holdings Limited, RFHL and FCGFH, or First, as we more affectionately refer to the stock. Now, both groups would have reported increased earnings over their most recently completed financial period. Let's take a look at what would have driven this performance and what investors can expect in the months ahead. Turning firstly to Republic Financial Holdings, or RFHL, well, the group did report a 10.4% increase in earnings per share, with a recorded $7.01 for that 9-month period ended 2022 June, compared to the 9-month period or comparable 9-month period of 2021 of $6.35. Net interest income was up just under 4% from $2.93 billion to just over $3 billion. Operating income overall up 4.5%, so other income certainly contributing its fair share to overall operating income, closing at $4.5 billion, versus the $4.3 billion, with operating profits overall driven by lower credit loss expenses, increasing 8.1% from $1.75 billion to $1.9 billion. Overall net profits attributable to equity holders increasing from $1.03 billion to just under $1.15 billion for the period. That 10.6% increase. When we take a look at the operating income by segment, well, it makes for fairly pleasant reading, regardless of the COVID-affected periods. There has been a steady uptrend in operating income for RFHL in the most recently concluded comparable periods. Net interest income increasing just about 2% or thereabouts, 3.9% or thereabouts, from $2.936 billion to that $3.05 billion, and other income increasing just under 6%, 5.7% to be exact, from $1.398 billion to $1.477 billion. Overall, that steady uptrend in operating income. So welcome news for RFHL shareholders. When we take a look at RFHL's profit before tax by geographical segment, not too much in change with respect to the overall major driver, which is Trinidad and Tobago, continuing to account for just about 50% of overall profit before taxes. Some major changes, while there were increases in PBT across most operating jurisdictions. Barbados did decline from $178 million to $144 million, and Ghana also declined to $106 million from $118 million in that light brown segment there. Those were the only two declines over comparable periods. Now, for investors looking at how valuable the stock is, or how cheap or expensive the stock is, well, with that recent recovery in earnings, the stock is becoming a little bit cheaper in terms of the price investors pay per dollar of earnings generated. And that price-to-earnings ratio has come down from a high of around 20 times in the 9-month period of 2020 to 16.2 times its current level, with trailing earnings being at 8.7, trailing 12-month earnings being $8.71 per share. So certainly getting back up to pre-COVID levels in terms of earnings capacity. So at a price of $141, RFHL is trading at a price-to-earnings ratio of 16.2 times, which is slightly above the banking sector average of 15 times, and does offer investors a dividend yield of 2.9%, which is slightly below the sector average dividend yield of 3.2%. But on the basis of geographical diversification, relatively fair valuations, and the positive prospect of economic normalization across the region, Bourse is going to maintain a market weight rating on RFHL for the time being. Turning quickly to First, or FCGFH, well, the group reported an earnings per share figure of $2.05, which is a 6.2% increase from the $1.93 recorded in the prior comparable period. Net interest income was actually down 3.9% from $1.1 billion to just under $1.09 billion. Total net income also declined overall from 2.9% from $1.6 billion to $1.57 billion. However, there was a write-back on credit impairments, moving from a loss of $63.7 million in the 9-month period of 2021 to a write-back of $56.6 million in the currently most recently concluded period. And overall, that would have contributed to an increase in profit after taxes from $487 million to $518 million. When we take a look at FCG's or First profit before tax by segment, some notable changes a very healthy growth in retail and corporate banking from 570 million to 698 million over comparable periods. A fairly flat performance, just a marginal decline of 0.7% or so in treasury and investment banking from 337 to 334, and about a 7% decrease in that trust and asset management segment from 45 to 41 odd million for First. When we take a look again at that value metric, price earnings, we can see that First is again moderating and becoming a little bit more attractive in terms of valuations at 18.1 times earnings. On a historical level, it is coming down from its 20.1 times at the 9-month period of 2021, but still some way off its historically low trading levels pre-COVID of around that 13.5 to 14 time multiple, meaning investors are currently paying a bit more per dollar of earnings generated for First Citizens Group Financial Holdings stock at this point in time. So at this point in time, at the price of $49.95, which is pretty much in line with that additional public offering price, First is trading at that price earnings ratio of 18.1 times, again above the sector average of 15 times, and is pretty much on the money in terms of dividend yield compared to the banking sector at 3.2%. On the basis of that improving non-interest income, or expectations of improving non-interest income, lower credit impairment losses, and relatively fair valuations, Bourse is going to maintain a market weight rating on First for the time being. Well, that's it for this week's edition. For more information, you can give us a call at 226-8773, email us at invest@boursefinancial.com, and check out our research on our website at bourseinvestment.com. And until next time, this has been the Bourse Report. Stay safe, and we'll see you next week.